What if I told you that paying for life, TPD and income protection insurance with your after-tax salary is a massive drain on your cash flow? You need insurance, but you shouldn't be paying for it with your hard-earned take-home pay. Let your SMSF foot the bill. It's the ultimate cash flow hack for families in their 40s. Most people assume that insurance is just another monthly bill they have to pay from their bank account. They think the only way to protect their family is to sacrifice their current lifestyle. I'm Troy, founder of Blue Chip SMSF, and we've set up thousands of SMSFs for Aussies. Today, we are breaking down why moving your insurance inside an SMSF is a game changer. We'll cover the cash flow benefits, the tax deductions, the types of insurance you can hold, and the critical importance of a binding death benefit nomination. Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services, and over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Let's start with the biggest benefit, the cash flow advantage. Paying for insurance premiums out of your own pocket is incredibly inefficient. If you're in your 40s, you're likely in a higher tax bracket, paying up to 45% tax on your income. That means to pay a $5,000 annual insurance premium, you may need to earn close to $10,000 before tax. That's a massive drain on your household budget. Now compare that to using your SMSF. By moving your insurance inside your SMSF, those premiums can be paid using pre-tax super contributions. Super is taxed at a concessional rate of just 15%. So instead of needing $10,000 before tax, you only need to contribute around $5,880 to cover that same $5,000 premium. Same cost, very different impact. And here's the key point. That difference stays in your pocket. You're freeing up thousands of dollars in personal cash flow every single year. You're effectively using the government's tax concessions to fund your family's protection, which is exactly why paying for insurance with after-tax money is one of the most common and costly mistakes people make. This brings us to the second major benefit, tax deductions. Not only are your premiums paid using concessional super, but your SMSF can also claim those premiums as a tax deduction, which means the fund itself pays less tax. Let's break it down. If your SMSF pays $5,000 in life and TPD premiums, it can claim that full amount as a deduction against its income. At a 15% tax rate, that's a $750 tax saving. So the real cost of that insurance isn't $5,000, it's closer to $4,250. Same policy, lower net cost. Now combine that with the personal cash flow savings we just covered, you're saving money personally and reducing tax inside your super. That's why this strategy is so powerful. It's a double benefit, and most people completely miss it. Now, this leads to the next question. What types of insurance can you actually hold inside an SMSF? Because this is where the rules matter. You can generally hold life insurance, income protection, and total and permanent disability, or TPD insurance. But with TPD, there's a critical distinction you need to understand. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. Now, let's talk about TPD insurance. There are two types you need to understand: any occupation and own occupation. Any occupation means you're disabled to the point where you can't work in any job that you're reasonably suited for based on your education, training, or experience. Own occupation is different. That means you can't work in your specific profession, but you may still be able to work in another role. Now, here's the critical rule. An SMSF can only hold any occupation TPD policies. If you hold an own occupation policy inside your SMSF, it becomes non-compliant, and that creates a serious problem. Because even if a claim is paid, the money could be trapped inside the fund until you reach retirement age. So while it sounds like a small detail, it has massive consequences. This is a complex area, and it's exactly why SMSF owners work closely with financial advisors to make sure everything is structured correctly. Now, one final point. If you hold life insurance inside your SMSF, you must have what's called a binding death benefit nomination, or BDBN. Here's why that matters. If you pass away, the insurance company doesn't pay the money directly to your family. It pays the money to the SMSF, and from there, the trustee decides who receives it. Now, if you don't have a valid BDBN, the remaining trustee, often your spouse, or a professional trustee, has the discretion to distribute the funds as they see fit, or according to the trust deed. This can lead to massive legal disputes and delays. A BDBN is a legal document that forces the trustee to pay the death benefit exactly as you instruct. It is the only way to guarantee that your insurance payout goes to the right people at the right time. Without it, your family's protection is at risk. So there you have it. Moving your insurance inside an SMSF is a powerful strategy to improve your cash flow, maximise tax deductions, and protect your family. It requires careful structuring, the right type of policies, and a rock-solid BDBN. Don't pay for insurance with after-tax money. Understand the rules, work with your professionals, and consider if an SMSF is the right vehicle to manage your family's protection. Thanks for watching, and I'll see you in the next video. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF, or book a call with our team to see if we can help you.